All right, good morning, everybody. Hello, and thank you for joining today's webinar for an overview of the most recent updates to the Paycheck Protection Program based on changes that were requested by the Biden-Harris administration and announced last week. Guidelines were just released yesterday evening, and we wanted to be sure to update you as soon as we could. My name is Matt Puglisi. I'm the Associate State Director with the Connecticut Small Business Development Center, and it's my pleasure today to be joined by my colleague, Stephen Samaya, who will do the bulk of the presentation. And we're very grateful to be joined today by Catherine Marks, District Director of the Connecticut SBA office. And if you're new to SBDC, thank you for joining us. We are bringing you one of the many webinars that we have done during the pandemic, together with partners from across the state, assisting hundreds of businesses in accessing COVID-19 funds. And we do provide other business assistance other than PPP, but we'll get into that a little bit later. But please understand, we recognize how difficult and confusing these changes have been during this COVID time period, and we're here to support you. In our agenda today, we're covering the most recent changes to the Paycheck Protection Program, both for those that might be applying for the first time or those that are seeking additional funds. Just upfront, we do not provide a copy of our slides. As we have been learning, the information is constantly changing, and we will have this webinar recorded so that you can watch that at a later time. It'll be on our website, which is ctsbdc.com, under the on-demand section in our training menu if you want to go back to it. But again, you can also reach out to an advisor for additional conversation. And after we go through the presentation, we will take some time to answer questions. And so we would like you to use the Q&A box at the bottom. And we encourage you to hear the details of the new information first, though, before you start asking questions, in case that your question is covered in our content. So with that, I will turn things over to Stephen to get into the details.
Well, thank you very much, Matt. And I want to reiterate that this webinar is designed to focus on the recent updates. And we're not going to cover all of the program details, such as the loan terms, and we're not going to go into forgiveness today. We've covered all of these details on PPP on previous webinars, and we've focused some webinars specifically on forgiveness. And you can view these at your own pace at the website that Matt mentioned at ctsbdc.com under the on-demand section, which is where this will be posted in a couple of days as well. Now today, 20,000-foot view of the changes that are brought by the Biden administration's announcement from February 22nd. As of Wednesday, February 24th, an exclusive 14-day PPP loan application period began for businesses and nonprofits with fewer than 20 employees. This priority window ends on March 10th, but this doesn't mean that you can't apply outside of that window. Applications will be open for everyone through the end of the month, March 31st. One thing to keep in mind, though, is that that's the deadline for banks to submit completed applications to the SBA, and your lenders may need an extra day or two. So some lenders cut things off a day or two early. So it's important to touch base with your lender and understand when the real practical deadline for that lender is. If you do have more than 20 employees, lenders won't be processing applications now because they're under a mandate to prioritize the processing of the smallest of employers. But normal applications will resume, as I mentioned, after March 10th, and you still have until March 31st to apply. Please note that because of the volume, as I mentioned, some lenders may choose to stop early, so it really is important. I'd say get in touch with your lender now, even if they're not ready to accept your current application, but try to find out what their actual deadline is going to be for the month. Can't emphasize that enough. Couple of the additional changes are that there are, this is intended to bring more financial support for sole proprietors, independent contractors, and self-employed individuals by revising the PPP funding formula for those applicants. And we'll go into details for that over the next few slides. It also eliminates some restrictions on PPP access for small business owners with prior non-fraud felony convictions, and it eliminates restrictions on small business owners who may have struggled to pay their federal student loans. Also, it really emphasizes that there's a need to ensure access for non-citizen small business owners who are lawful U.S. residents by clarifying that they may use their individual tax identification number, or ITIN, to apply for their PPP. On the next slide, we'll discuss changes to the calculations. The biggest calculation change, which requires not only revising the rules, but the applications forms themselves, is designed to assist some businesses that may have been left out before, as well as to support what tends to be the smaller business owners in accessing much needed funds. If you're a self-employed individual, this could mean that you're a sole proprietor, an independent contractor, a single member LLC owner, or otherwise self-employed, and you file a Schedule C to report your income from self-employment, you will now have the choice whether to select gross or net income from your Schedule C form. You can use your 2019 or 2020 income and payroll as the basis for your calculations. Now, you'll need to have your completed Schedule C to make these calculations and to back up the amounts for which you're applying. You should have your 2019 taxes done by now, obviously, so accessing your Schedule C if you're using your 2019 numbers should be pretty straightforward. But if you want to use your 2020 numbers, you can do so even if you haven't filed your taxes. You just need to complete your 2020 Schedule C form, even if you're not ready to formally file your taxes. However, you will have to attest to the accuracy of your Schedule C. So this can't be a rough draft. You really do have to go through all the calculations to make sure your Schedule C is accurate, but it doesn't mean that you have to have already filed with the IRS. These rules apply whether you're seeking a PPP loan for the first time or whether you're looking for a second round of funding. On the next slide, we'll continue to review these calculations. Whether you're applying for the first or second time, you'll be looking at the same lines of Schedule C to calculate the amount for which you may qualify. As I mentioned, you now have the option to use either gross or net income. So you can look either at line 7, the gross income line, which is highlighted by the blue box on this slide, or look toward the bottom of the form and you'll see line 31, which is the net profit amount. Whether you use line 7 or line 31, there's still a $100,000 cap. So if you show an amount greater than that, whichever way you decide to calculate, you still need to reduce that to $100,000 before moving forward with the calculation. If both your net profit and gross income are 0 or less, or negative, that is, you are not eligible to get a PPP loan. And the intention of the change that was made so that you can use gross income was really to help people who may not have had a positive net income and did show either a 0 or negative on line 31, so that they could look to line 7. But if line 7 is still not a positive number, unfortunately, you remain ineligible. If you have no employees, the next step is to calculate the average monthly net profit or gross income amount. To do this, you would take the amount that you've chosen, either from line 7 or line 31, again, capping that at $100,000 if the number's higher, and then you divide it by 12, number of months, to get your monthly income. If you had a $24,000 net profit in line 31, for instance, your average monthly net profit would be $24,000 divided by 12, which is $2,000. The last step would be then to multiply that monthly net amount by 2.5 to get the amount of the PPP loan for which you would qualify. Now, there's an important exception to this calculation. Second round applicants who are classified as accommodation or food services, which are those businesses with NAICS codes starting with 72, can request 3.5 times their average monthly payroll. Again, this exception for NAICS code 72 applies to second draw applicants only. So let's review this again on the next slide. Let's say that your gross income line, line 7, again, these steps would be exactly the same if you're using your net profit line. You look at line 7 on your 2019 or 2020 Schedule C form. If that amount is over 100,000, reduce it to 100,000 because that's the cap. And again, remember, if the amount is 0, you still don't qualify. However, if you do have a number, line 7, positive number less than $100,000 now, you divide that by 12 to get your average monthly net profit, multiply by 2.5. Based on the $100,000 cap, that means that the cap for the loan amount is $20,833. So dividing the 24,000 by 12 again, you get 2.5. Multiplying it by, you get 2,000. Multiplying that by 2.5, you get 5,000. Or in the case where if you were in the food or accommodations business and your NAICS code starts with 72, you would be able to multiply by 3.5 and you would have $7,000 for that calculation for the second draw only. And again, please note the maximum loan for those calculations, just so that you have that in your hip pocket, is $29,167, which is 3.5 months, capped at $100,000 per. Now let's take a look at how you calculate the PPP loan if you do have employees. The calculation is slightly different because of your gross income. Your gross income amount includes funds that go toward employees, and these amounts should not be counted twice. Let's see what that means. So again, you can start with your Schedule C, and you still have the choice of using gross income or net profit, so line 7 or line 31. However, if you use gross income, line 7, you then have to deduct your allowable employee payroll costs, which are reported on lines 14, 19, and 26 of your Schedule C. This is because you'll instead use the employee form 941, the employees forms 941, and add the benefits separately. So you can't count these twice. On the next slide, we'll look at this in a little bit more detail. Again, you can choose the numbers either from 2019 or 2020. So you start with your Schedule C from the year that you select, and you determine whether you want to choose your gross income or your net income to calculate the first part. If you, the numbers taken from Schedule C are meant to cover either your business expenses plus owner's compensation in the case of gross income, or simply serve as owner's income replacement if you're using line 31. Let's focus on the blue box on the slide for a moment. If you're using gross income, you would take line 7, subtract the sum of lines 14, 19, and 26 to get your eligible Schedule C amount. As always, that amount's capped at $100,000. In the red box, you can see that if you use your net profit, you only need to look at line 31, which again would be capped at $100,000. Now, you would then, again, if you have employees, you would then use your 941s to take the gross wages, and this is important, capping them at $100,000 per individual employee. So you need to look at the 941s and look at each employee individually, not just in aggregate, so that for PPP calculations, you can reduce the compensation of any individual employee earning over $100,000 down to $100,000. And you'd go back to your Schedule C to pull the numbers that you took out before, which relate to employee compensation, which include the benefits such as health, life, vision, dental, and those that are recorded on line 14 of your Schedule C. And you would also look at your retirement contributions, which are recorded on line 19 of your Schedule C. And you would also then look at your SUTA from the quarterly wage reports and add those in. The last step is then to add the amount from your Schedule C to your eligible payroll costs, and then follow the same steps that we laid out before, which is to divide that total number, once you get it, by 12 to get your average monthly amount. Then you multiply that by 2.5. Again, if you're in an NAICS code 72, accommodations or restaurant, you can multiply that by 3.5 instead. On the next slide, we'll discuss the documentation that you need for your PPP application. What kind of documents will I need? We get that question a lot, especially on our first conversations. Well, you'll need to back up both your eligibility and the amount that you're requesting. So for documenting payroll or relevant wages, you can use the following documents depending on your business structure. You would use Form 1099 MISC if you're working as an independent contractor. You would need your Schedule C, or if you're self-employed, or if you're a farmer, your Schedule F. And you would need your income and you would look at your income and expenses from a sole proprietorship or your bank records. And of course, as I mentioned before, you'll need your 941s if you have employees. You'll also be asked for documentation from the period that includes February 15th, 2020, to establish that your business was in fact in operation on February 15th. This documentation can be in the form of an invoice, it can be a bank statement, or a book of record. As a reminder, the reason for this is that it is required to qualify for a PPP that your business was in operation as of February 15th, 2020 to qualify for the PPP program at all. Now, if you're applying for the second time with the same lender that you applied with the first time, and you're still choosing to use your 2019 payroll as the calculation, you don't need to present additional information. They should have all of the documentation that you already provided, and you wouldn't have to provide that again. However, if you do choose to apply with a different lender, or choose to use 2020 numbers instead of 2019 numbers, then you'd have to gather all the same documentation again that you did the first time. The last piece is for those who are applying for the second draw PPP. You also have to prove that you had a decline of 25% in revenue from any quarter, at least one quarter, between 2019 and 2020. Overall gross revenue or gross income is defined as revenue and cost of goods sold as you would document them on your 1040 form for your taxes. You might also be able to use internal financial documents annotated where needed, or an annotated bank statement specifically to demonstrate the revenue decline. If you're a business that doesn't normally have a filing requirement to provide quarterly reports, then that is where providing your internal documentation, attesting to it, certifying that it is true and accurate, and signing it's going to be a requirement to demonstrate that 25% decline. We've covered this in great detail on earlier presentations. So again, I refer you back to our website, some of the recorded webinars, so that you can take a look at the details, because there's a bit to go into that. There are different ways that you can look at that decline to make sure that you qualify for the 25% and to document it. You must also show, by the way, for a second draw, that you have used all of the PPP funds from your first loan, or that you're on track to deplete them before getting the funds from your second PPP. And if you're getting a loan for $150,000 or less, it's important to note that you have until the time of forgiveness, or upon request from your lender or the SBA, to provide the documentation for that 25% revenue decline that I was mentioning. Now, you must know in advance that you meet that, so you have to go through the calculations anyway, but to enable you to apply a little bit more quickly, recognizing that there's limited time frame and that smaller businesses may not have the ability to quickly produce these financial reports, you will have until the time that you apply for forgiveness to provide the documentation for that. But you'll have to attest in the application that you did in fact experience the 25% decline. Please note that application forms for the PPP have been revised for Schedule C filers for both first and second round loans, and lenders may need a couple of days to make these changes in their systems to reflect the SBA rules and the form changes. So please check with your lenders and find out when the updated applications will be available. I know a lot of the time they're going to say keep checking back to the website, and that may be what you have to do, and I suggest you stay on top of it, but in all likelihood it'll take a couple of days to be able to file the application. On the next slide, I want to emphasize a couple of points that we mentioned briefly in the beginning of the presentation. Applicants with non-financial fraud felonies will no longer be restricted to apply based on the prior 1-year look-back period. Those with financial fraud related felonies are still subject, though, to a 5-year look-back period. Any applicants with delinquent or defaulted federal student loans will no longer be prevented from applying for a PPP. And the SBA has also issued a notice to lenders that states clearly the eligibility for businesses owned by or self-employed individuals with an ITIN instead of a social security number. An ITIN is a tax processing number only available to certain non-resident and resident aliens. Non-residents and resident aliens and their spouses and dependents who cannot get a social security number. This has always been the case. This was from the beginning. This was in the legislation, but it wasn't universally understood. So the SBA in the new guidance has really emphasized this points and contacted lenders to make sure that they understand that all legal non-resident aliens are in fact eligible, even if they don't have social security numbers. Now, in addition to these webinars, the Connecticut SBDC has many resources to help, and we have advisors to work with businesses one-on-one. And to tell us a little bit more about how the Connecticut Small Business Development Center can help, I'd like to turn it back over to Matt Pugliese, the Associate State Director for the CTSBDC. Matt?
Thanks, Stephen. As I initially mentioned, Connecticut Small Business Development Center works with small businesses, and we provide no-cost confidential advising using a team of advisors and a network throughout the state. We have 20 advisors. We serve all 169 towns throughout the state. And in this COVID environment, we're meeting with people virtually. So it's very easy for us to find the time and work with you. We work with all businesses in all industries, whether you're startup, growth, or at exit stage. And we have powerful tools that we can bring to leverage in the advising process that include market research, financial analysis, in-depth projections, and decision-making frameworks to help you meet your challenge. And we have a COVID Business Resource Center that's available at ctsbdc.com, and that has the latest information on federal, state, and other resources that are available at this time. And at ctsbdc.com, you can reach out and request business advising and register to work with an advisor. That's the best way to do that. And I do have to say that while we've gone through this presentation pretty quickly, there are some big key changes that we wanted to make sure that we rolled out and made everybody aware of how they could change their calculations. But for anybody that is new, because they didn't think that they could apply for PPP in the past, we do have in our on-demand training section presentations that go through the PPP process and all of the eligible expenses in a much more thorough way if you need to catch up and look back at that. And so again, Lisa, or Megan, we can go on to the next slide. ctsbdc.com is the place to go for more information and just to register to work with an advisor like Stephen in a one-on-one way. And so we'll move into questions and answers, and we have some coming in, and we're very happy to have Catherine Marks, the Connecticut District Director from the SBA, here to join us. So the first question, is there word yet on whether or not a second round PPP application can be amended due to these new guidelines? I'm waiting to sign my offer in case my application can be changed to use line 7. So, Catherine, I think that maybe I'd like to start with you on this, as we all got this information about the same time late yesterday evening. So we're all trying to read through and.
Right. Thank you, Matt. And thank you, Stephen, for that incredibly concise presentation of very complex new information. To all the folks on the call, if you have your application in, it's time to talk to your lender and pull your application and put a new one in with these Schedule C changes if you think that's advantageous for you. That's obviously your choice to look at the numbers and see what you want to do. If your application's gone through and your lender is holding the disbursement of that, again, talk to the lender here. They'll know, what they can and cannot do. But if your application is just in process, you're going to need to fill out a new application. And as Stephen said, the banks receive this information and they're currently working on a new application. So, the best thing to do is to keep on calling them, understand when it's opened, but you will need to do a new application. And I'll answer a question before it's asked. If you received a second draw PPP earlier this year in 2021, you will not be able to go in and change that application. So there's no quote unquote true up of these numbers. So it's for new applications only. The rules came out yesterday. And so if you have an application in process, talk to your lender, see if you can cancel that application and reapply once they have the application ready. There is no true up. If you're talking about a disbursement of funds, you're going to have that call and conversation with the lender.
Great. Thank you very much, Catherine. And then another question along those lines is there's been this 2-week period where the smallest businesses have been able to apply, and this information is just coming out. Just to clarify for everybody, that doesn't mean that they cannot continue to apply after next Wednesday, correct?
Yeah, and I think that's so important. First of all, I'd like to always say thank you to SBDC, our resource partners, and our lenders. The phrase of dealing with COVID has been we're in it together, and that's how Connecticut has been with this with this crisis and dealing with the federal relief. Matt, I don't know if you know, but today we announced over $2 billion in PPP loans just in Connecticut and over 25,000 approved applications. So that's through the end of February. You have any small business has the opportunity to apply up until March 31st or until your lender is taking applications, which may be a few days before March 31st. But sole proprietors, LLCs, self-employed individuals can apply up to March 31st. If you did not receive a loan in 2020, you are first draw, and you are definitely eligible for the Paycheck Protection Forgivable Loan.
Great. Thank you so much, Catherine. That is a really important clarification. Stephen, I think that we'll put some of these to you now. So when applying for the second round and calculating average monthly payroll, is this for the current number of employees? So if they had an employee that has retired during 2020, do they include their salary in calculations? Or, right, so there's been a change since a year ago. How do they do that calculation?
Well, again, the first thing that you would want to do is take a look at your 2019 payroll and your 2020 payroll. In all likelihood, you'll want to use the year that has the higher number because that would help you to calculate a higher PPP loan amount. If that is 2020, as per the example, and it's pretty normal that people might leave during the course of a year. The reason we're looking at an average monthly is you can take your entire year. You would take your payroll for all of 2020 and then divide the total by 12 months. And then you do the calculation to multiply that out by 2.5 or 3.5 if you're in the correct NAICS code 72. The number of employees doesn't impact the amount of the loan per se, unless, well, it's not the number of employees, but you do have to keep in mind, as I mentioned a few times, you have to cap the compensation for any individual employee. So you do have to look at the individual employees to make sure that none of them have gone over $100,000 for the entire year and reduce it if they have back to 100,000. But again, you take the entire payroll for the whole of 2020 and then divide that by 12. You're not dividing it by a number of employees in any way. So the absolute number, the head count, wouldn't impact that for calculating the loan amount.
Great, thank you. For the documentation, a couple of documentation questions. For the list of documents that you went through, do they need to have all of these or just one of these from that list?
It depends on your legal structure, which documents you're going to need. As we mentioned, you'll need your Schedule C if you're a Schedule C filer. And then if you are an independent contractor and you do get 1099s, you'll have to provide those. Obviously, if you don't get 1099s, you won't be providing those. So it's not every document. It depends on the legal structure of your business, what's going to be required. But you can count on needing to document your payroll if you have a payroll. As we mentioned, using the 941s. You can use payroll reports from third-party processors or internal, but they would need to be backed up by the 941s. Your Schedule C, if you're a Schedule C filer, and again, some documentation to prove that your business was in operation on February 15th.
Great. So it's really the 941 and then one of the other documents.
Correct. Yes. If you have,
provided that it establishes the February 15th in business.
Right. Thank you.
Great. Another question is, do these documents need to be presented in any official capacity by an accountant or a bookkeeper, or could they print them off from their accounting software and submit them directly themselves?
I think it depends on what documents you're referring to, but again, your Schedule C is, your part of your tax return. Again, you don't have to file if you're using your 2020, but it should be accurate. Most of the clients that I'm talking to are working with their accountants if they generally use a tax preparer or an accountant to get their Schedule C done, even if they're not ready to send in their tax return. Folks who do it themselves are working on it themselves. But, so nothing needs to be certified. There's no public accountant certification required or anything to that effect, but everything needs to be true and accurate. And again, if you, for instance, as I mentioned, if you're documenting a 25% reduction for your second draw and you're using internal documents for that, you'll need to basically give an explanation on the documentation, certify that they are accurate, and sign that. So you're attesting to that. You're making a legal representation that those are accurate numbers. And if you're audited, and the SBA does have enhanced audit powers now, so we're not suggesting that it's going to be 100% audit by any means, but you need to be as accurate as you possibly can. And I do think that having an accountant, if you generally use a tax preparer or an accountant, to look over your Schedule C before you submit it is just would make sense, but it's not a legal requirement.
Can I just add 2 cents on that?
Please.
When you apply for these loans, there's a lot of attestations that you're doing. You really need to make sure you read those carefully. You're entering into a financial agreement with the government with an SBA guarantee. So don't just gloss over them. Make sure you read it and you're understanding that the numbers that you're putting down on paper are accurate. So even if you're getting the information from your accountant, you're signing your name onto these documents, and it's a very serious commitment that you're doing. So people tend to, and that goes with the forgiveness process on the other end as well.
Mm-hmm.
It's simplified under 150,000, and the bank might ask for documentation, but you have to have that documentation on hand if the SBA comes back and needs to verify these numbers.
It's a really excellent point, Catherine. Thank you for making it. We have a question here that I'll answer. First-time applicant was just confused about the 25% revenue decline, and it is a first-time applicant does not need to demonstrate that 25% revenue decline. Only a second-time applicant, and that's a second-time applicant doesn't have to do it at time of application. It could be at a later date, but you need to, again, this goes back to the attestation. You need to be confident that you can back up that showing the 25% revenue decline. Stephen, if this kind of goes to the calculation piece again, if a business started in 2019 but was not in business for the full year, can you divide line 7 by the number of months in operation? Their 2019 monthly income was higher than 2020 before the impact of the pandemic. Does that make sense to you?
No, that's a very good question, and I'm going to actually invite Catherine or Valeria to help out with this, because I think it's critical for a number of businesses that may have started, and I don't want to lead anyone astray. Does that, if a business was only in operation for several months of 2019, Did they still divide by 12 months or only by the number of months they were in operation?
I have the IFR in front of me. I'm going to
Thank you.
skim it, but I believe that it's still 12 months. Valeria?
Apologies, I was muted. Yes, you do have, you're able to use the corresponding period from 2019. But you could also use at this point, you would have a complete 12-month period that you could use.
So Valeria, when you say the corresponding period, does that mean that if they were only in operation, just for an example, for 6 months in 2019, that they would divide their payroll by 6 as opposed to by 12, or do they still need to divide by 12?
So there are very specific periods that can't be used, and because we haven't talked about applications only using a portion of 2019 for some time,
Right.
I can't remember off the top of my head, so I will have to do what Catherine is doing, which is just take a quick look at some of my reference documents.
So I see here that it simply states here to divide the amount by 12. It does not, what I'm reading right here does not say divide by 12 or the amount of months you're in business. So what I'm reading here simply states divide the number by 12. But we certainly can put that question into headquarters to get a clarification.
Thank you both very much.
Send us an email because we answered this question when the program was first coming out, and there were people that were in business as of February 15th of 2020 that had maybe opened just a quarter prior in 2019. And there were guidelines that were specific to this. Again, they're just not top of mind because we hadn't had a question like this in some time. So if you don't mind sending an email to that address, I'm sure that if we just take a minute to look back, we'll be able to find it easily.
Great, thank you all. And thank you for the question. So we have a question. A couple owns their business and it is a C Corp. Can they use gross income to calculate their payroll?
No, only Schedule C filers are going to be able to use gross income. So that's really independent contractors, sole proprietors, self-employed individuals, not intended for C Corps.
Great, and there's a different process that I am not
you're using
my notes quickly.
You're using your payroll as a C Corp, not your income as a C Corp, to calculate the amount that for which you qualify.
Great, thank you. Let's see what the next question is. Oh, this is a good one. We have somebody who does per diem work as a relief veterinarian, and one of their clients does not issue a 1099 to them, but they do report the income from this individual. Without that 1099 MISC, what do? I do have bank copies of the checks.
A question that's specific, I would say, do talk to your lender. I don't know that the letter of the law addresses that so specifically. I'll go out on a limb to say it's logical that if it is income to you, you should be able to, especially you are reporting that income and paying taxes on that income. So you're providing your 1099 as backup to your Schedule C. Valeria, would you like to elaborate on that?
Yeah, those are the situations where the SBA and its guidelines has provided additional flexibility, right? Where you're able to present, for example, an attestation that your bank account statement that says this check is for income from this particular client.
Right.
And so you can use alternative documents to back it up. Yeah. If you don't have a 1099. That's why you have so many different options, is so that if you don't happen to have one, as long as you have the basics. If you don't happen to have one, then there's other ways to provide that information.
Yeah, the check stubs, for instance, if you needed to provide those for documentation, again, you are claiming this as income, it is reported, you're paying taxes on it, so you should be able to use that as the same basis for the calculation of your PPP. But again, make sure your lender understands that and that you are able to present the alternative documentation.
Great, thank you. I'm looking to see if we have covered all the questions that have come in. And Valeria, you just double checking, because I know that you were responding to some separately. Are there any left out there that we haven't addressed? I would, again, tell people as you get into complicated situations, that's a great opportunity to have a conversation with an advisor that can work through the troubleshooting, help you with the conversation, with the information that you need to approach your lender in terms of getting your application complete. If you're running into issues where you have put in an application and you haven't heard back and you're wondering what that means for you, these are the times that you want to be talking with an advisor that can help you navigate this. It's complex, and it's been, a constantly shifting, sea of sand that we're standing on here. So I appreciate everybody's patience with that.
Matt, can I?
Please.
I have another webinar that I need to switch terminals at my desk. So I would just like to say a couple things. We have a really great attendance on this call today, and many of you may have seen the SBDC for the first time on social media and been introduced to this webinar and to the Connecticut SBDC for the first time. I'd like to say that you could have just opened up a door of opportunity for your business. The SBDC is a very strong partner with the SBA, and we share the core mission, and that is to help Connecticut's small businesses. So you might say, my business doesn't need a business advisor. I would say, make an appointment, give them a call, talk to them, because they have a lot of proprietary software, a lot of experience that I think would be beneficial for almost any small business to associate themselves with SBA or any one of our resource partners. So you've opened the door today to opportunity to learn about PPP. Hopefully that you can go apply, but you also opened your door to make your business stronger, to help it pivot in this disaster that we're dealing with. And as always, I appreciate being included in these webinars, and thank you for the clear and concise information. And to everyone out there, be well and shop small.
Thank you very much, Catherine. Another question just popped up that I saw that talked about what to do if you've applied and you've never heard back from your lender, and how to move forward. And I think, Stephen, that's a situation in which you want to formally request to that lender in writing that you want to retract your application, so that way you can move on to a new lender.
Yeah, anytime, obviously, whether it's to follow up with a lender, you do have to be persistent with some, especially online lenders. Some of them, it's difficult to get someone on the phone. Document everything, as Matt suggested, with emails, so that you have that all recorded, you have the timeline of that, but also be persistent. I know I've spoken with clients who have, they call one number, they try to get another number, and they eventually, you generally, whether it's through speaking to them, and the other thing is a lot of online lenders have chats, and they're far more responsive in a chat than they are by phone. So you might have to try that, but importantly, document it in an email, get it into them. And if you're not having luck, again, we don't necessarily have direct lines into all the lenders, but we do have people, that we can contact at a number of them as well. So again, it's a good reason to reach out to us at the SBDC to, see if we are able to help you with those lenders.
And I'll just add 2 cents. Valeria and I were talking about this before we started our webinar. If your lender did put through the application process, but you have hold codes on it, and they're not working through those with you, if you go to another lender, it's going to trigger this person has already applied. So, if you really are stuck with a lender, find another lender. We have a lender match. I know SBDC has information, but that's going to take some work because that other lender who's not responsive to you now, we need to make sure that they are responsive to you, and we need to close out that application. So, I would stick with them and move on to another lender if you're not satisfied, but this could hold you up. So we want to make sure that gets cleared.
Great point.
So
Great.
I had a chance while we were pulling these other things to look back at those guidelines, and it is a full 12 months of payroll, which at this point everybody should have if you started your business as of the required starting date of February 15th, 2020. So you should have like 12 months of payroll to use. The only exception that they used to have was back when the program first started in 2020 for people that maybe were not open in 2019 but had just opened in 2020, and they could use the first couple of months of the year to do their monthly average payroll calculation then. But at this point, because we do have 12 months of payroll for everybody, even if it's not the straight calendar year, you could use your last 12 months of payroll.
Great
Thank you,
point.
Valeria. And so, Catherine, while we still have you for a moment, there have been a couple of questions asking what someone should do if they rushed in to get their second draw application for PPP in. It's been paid out, and now there's this calculation change, and they're out of money. And SBDC and yourself are not the ones that are making these rules. Do you have any recommendations or any comments that you would like to offer?
No, and it is true. My answer is not going to be well received. But at this point in time, it needs to be clarified that there is no true up for those who have already put an application in and have it dispersed. So these rule changes are for those, from the day that we got the rule changes yesterday going forward. Unfortunately, that is the way situation is at this point in time.
I'll make one suggestion, and it will not change your PPP, but I've spoken with some clients that either did in fact get their second draw dispersed already, and it was relatively small and it was less than their needs, or where they might not have qualified because while their business was down, it was not reduced 25% for any one quarter, so they couldn't qualify for the second draw PPP. And in some cases, clients have decided, now it is time to avail themselves of the EIDL program, the Emergency Injury Disaster Loan Program, where at first they thought, well, the PPP is going to get me through. I don't want debt, even at a good rate and good terms, but I'd rather just see if I can go with the forgivable loan, essentially a grant. But now some are saying, I think I need to bridge a few more months, and an EIDL may be the right vehicle for me. And I'm helping some folks through that right now. We're going to be putting those applications in the next couple of weeks.
Yeah, and I want to repeat an important point that Catherine made, because I know that we're throwing a lot of information at you, and sometimes it can be difficult to capture some of these things. But, Catherine made a really important point that if you have not received your PPP money, right? If you put in an application with the lender and it is on hold and you haven't received the money, do reach out to your lender to talk to them, because if you have not received the money, there is a possibility that you might be able to adjust it. So basically, you're doing canceling, right? That current application and doing it again, but you might be able to take advantage of it if you have not received the money. I think it's just a great point that Catherine made, and I know a lot of people, I'm sure, are paying close attention to that. So I wanted to make sure that we repeated it one more time. for those that may have something hanging in the line in the bank and may be able to take advantage of that opportunity.
And pardon me, I do know that some lenders, we anticipated these changes happening. So some lenders, you know, are, especially our local lenders are, you know, ready to pivot. But again, give them time because they just received the application and they have to, it is a whole new application that has to be processed.
Thank you all. And the last thing I would add for anybody that is, you know, is not in a position now where they're very happy. This is information that you should communicate to your federal legislatures, your congressperson, and to your senators, because there have been lots of issues that the users of the PPP program have had since last April. And over time, it's been people like you reaching out to your congresspeople that have caused changes to be made. So, you know, that is the best action that you can take right now.
Right, and that's why I stressed my points were at this time. The rules for the PPP, the rules that Stephen went through very well, Matt, Valeria, and myself, you know, continue to get out there. Those are rules based on the congressional legislation, the legislation that was you know, passed and goes through the SBA and the Treasury through rules. So we're happy to help all our small businesses, but if you are unhappy, this is federally funds, and you know, make sure you communicate as such. Thank you.
Great. Thank you, Catherine. Thank you, Stephen. Thank you, Valeria. And thank you, everybody, for taking the time today. And again, ctsbdc.com is where you can reach out for an advisor, and the email address here if you have an additional question. All right. We hope you all have a good day. Thank you.
Thank you very much.